The markets continue to reach record highs, but the S&P 500 is still trading within a tight range and has only returned just under 3% since the start of the year, leaving investors wondering what it will take to push markets higher. Here with more analysis is Jeff Tomasulo, CEO and Head Portfolio Manager at Vespula Capital Management. And Jeff, it seems like the markets are on this path to nowhere, even though we're at record highs. What do you say?
Well, I tell you, it's been a very frustrating market, right? Because we are trading within that range. And last quarter, we came out with very low GDP. So we need a catalyst that's either going to push us above this level and let us get some real good gains, or a catalyst that's actually going to get us a correction, which I think a correction would be very healthy for this market right now.
And what would it take to push markets higher? Is it data, like the Fed says, is what's leading this market?
Well, think about this. We've had such light retail sales over the last couple of quarters, and we've had a huge, I guess, tax cut because of low gasoline prices.
Yeah,
and
consumers
oil prices.
are not spending that stimulus.
Exactly. So I think if they come in and they start spending, you'll see a big move in the market above those levels of the 2100.
All right, and what about the Fed? I mean, investors seem to be all eyes on the Fed. Do you still see them raising rates in September, or is 2015 maybe off the table?
I think they're going to raise rates, but I think the Fed got extremely lucky because they jawboned. And what I mean by jawboning is they put the language in that they were going to raise rates. They were going to raise rates. And what the market did, the market is self-regulated. So now yields on the 30-year and the 10-year had a huge move this month, and it makes the Fed's job much easier to raise in a measured way. So they're going to raise by 0.25% now, but the market priced it in, so it will have minimum effect on the overall market. So we won't have these big moves up or down in the market. It's already priced in.
All right, but given the sort of boring nature of the markets we're seeing now, what do you say to investors? I mean, should they just sell in May and then sort of get back into the markets during the fall when things, at least historically, tend to pick up?
Well, I hate when people say this, but it's a stock picker's market. It's always a stock picker's market, right? You want to pick good stocks. But right now, I think you could, with the notion that we're going to have higher interest rates, there's a great play where you can actually get long financials and short utilities, because those are the two biggest industries that are going to get hit or helped by higher interest rates.
Financials being helped, utilities being hurt.
Exactly.
Let's also talk about this phony SEC filing as it relates to Avon. What's your take on that? Does that worry you?
Well, it worries me a little bit because I think you and I spoke once about the flash crash. This is another segment of where you have to be worried about people manipulating the market, and we have no rules in place. And we are in an environment where information hits the wires immediately and people react. We have algorithms, right? Computers that are making trades based on certain movements, certain news flow. And that's what scares me, because you could have someone like this get that deep in by actually filing with the SEC and it make a 20% move. People made and lost millions of dollars on that move yesterday. So the SEC, I think, I know, has to start looking at protocol, real serious protocol on how to handle something like that.
All right, that's of course something we'll be watching. Jeff, thanks very much for coming in.
Thank you for having me.
I'm Scott Gamm, and you're watching The Street.